Good morning. Welcome to today's webinar. So as people are streaming in, I would just like to tell you more about what we do. So I think let me launch a poll first to let me know, is this your first time in this webinar? So we have this daily webinar where Jin will be walking you through the thoughts and ideas on specific currency. So what we usually do is Monday we'll talk about the Aussie and Kiwi, Tuesday on the Euro, Wednesday on the pound, Thursday on the yen and gold, Friday is on the cat oil, and today is Wednesday is on the, we'll be talking about the pound. So Jim will be talking about pound today. So this webinar is going to be very beneficial to long-term investors and short-term traders. So during this session, Jin is going to be going through what could move prices, possible trade ideas, highlighting potential targets and risks. So disclaimer, any information shared during this session is not intended to be trade recommendation. So it's solely the opinion of the views of the speakers. So please do remember to do your own analysis prior to entering any trades. So I'm Kenneth here. I've known Jin for a couple of years now. So first as a student, then after I became a coach, then now become a business partner in Forex Briefcase. So Jin runs LCMS Traders and Forex Briefcase as a trading coach and a $1 million trader. So what this means that he trades have also been invited to speak in many stages globally. So in fact, one of the reasons why you might be here is because you have seen him presenting in some of the events or have attended his course before. So while we are just about to get started, let me launch another poll. Yep, let me launch another poll to let me know, where did you know about this webinar from? So without further ado, while you are filling this form, I'll pass this over to Jin and start today's currency call.
Good morning, everyone. How are you all today? Give me a big thumbs up if you are doing well. Come on, do I see any thumbs up? I'm on speaker view, so I can't see. I forgot I'm on speaker view, so I can't see any thumbs up if there are. I believe you are, and we are live on we are live on Facebook, Forex Trading Asia. We are also okay. We're also recording this as well every day. Today we're talking about the pound US dollar, and then I'll look back into the euro pound as well. The group chat on the Zoom chat here has been going off. You know, while Kenneth was talking, everyone is talking about how the market has been very erratic, you know, volatile, spiking up, spiking down. It's been moving around quite crazily, right? In inverted commas, quite crazily. That's also the reason why yesterday and the past few days I've been saying, right, when you trade this week, keep your trades quite short term. If you do anything medium longer term, you're probably going to get spiked out quite a bit, you know, especially if you try and keep your stops quite tight, and then you try for that big profit level. What might happen is that you get stopped out and then it moves up to where your profit could have been, or you know, it just jumps around, doesn't really give you a trend, doesn't really move in any particular direction. So you know, you would be not either in a profit level or in a significant loss either. So you're just sitting there with trades running in the market but not in the money. So that's going to be a bit of a problem. One of the things is what I've got questions here. So before I even jump into looking at the charts and the pound, I've already got questions here asking why are we looking at the spikes, right? So the spikes in the market is really coming from several different news sources, several different sources of news, or we call it triggers, right? One of the reasons is COVID-19 cases re-spiking in the US. You know, I think the medical guy, I can't remember what's his name, came out and said that if they don't shut down, if people don't take it seriously, they're going to see massive numbers of cases in the US again, right? So that's one of the reasons why we saw a lot of spiking up and down in across the board. Another reason was we saw in the UK they started talking about more recessionary impact, and also they started talking about the Brexit possible um, extension or possible like dragging on again. So that's another reason there. Even in Australia, we saw more COVID cases as well. So as much as I think early last month we said that COVID is becoming slightly of an old news already. It's an old news that still has an impact, because if we see that massive number come back in, we could see markets being closed down again, economies being closed down, people being made to stay at home again. I think that's happening in Australia and Melbourne already, where people are told to stay at home unless they are going for work or exercise or buying supplies. So we already see some effect of that second wave, where people already know what to expect, right? They already know what to expect. And that might actually not be the best thing, because if you don't know what to expect, you sit out, you wait, and you wait to see what's going to happen. But when you know what to expect, you know that economies are going to close, people are going to lose jobs, GDP is going to suffer, people are not going to buy as much, then that might actually magnify things, because people start for what's it called, pre-running, forerunning the whole situation, and then we could see the markets being even more volatile, spiking even more, even higher or lower. So I think Eddie's on the ground, and I think Eddie's in Australia. Eddie said Melbourne's locked down only in 10 suburbs, not the whole of Melbourne. Well, 10 suburbs is still quite a lot. I don't know which 10. I haven't followed the news. I know that WA in Australia is doing well, so that's my main concern there. WA is doing well, but Melbourne it is in lockdown. Okay, the rural parts. So the concern here will be whether this is going to spread across. The lockdown is possibly going to try and maintain that area, and hopefully it doesn't spread across. But the idea of that second wave is going to have an impact on the markets, regardless of which area it is. Just coming out on the news saying that Melbourne, areas of Melbourne is in lockdown, areas in Australia is in lockdown. That's going to have an impact. In addition to all that talk about the US having a big second wave, or having an increased number if people don't stay at home, people don't wear masks, they don't congregate. All that kind of news is going to have an impact. It's not going to have a direct impact, or might have a direct impact, but it's more likely just going to have either a direct or an indirect impact to the market, and that's why we see that spike up and down. If it has a direct impact, a very consistent direct impact, we're going to see the market go spike up and then continue moving up, or spike down and continue moving down. Now, with all these news coming left, right, center, it's spiking up. It's terrible news. It's for the US, it spikes up. Then after that, it's good and it comes back down. So it's jumping up and down in this scenario now. So the main things, I've rambled on a little bit about this whole COVID situation and all that other news and other trends coming in. The main thing right now, if you are trading the market, and I'm pretty sure most of you sitting here are trading the market, try and maintain that. One is the flexibility, be ready to take the opportunity, the very short-term opportunities, upwards or downwards, and then also have your trades be a bit more actively managed, rather than putting in a trade and then leaving it, letting it run to whatever it does, right? So actively manage that trade, take advantage of some spikes as well. You can actually take advantage of some spikes. Okay, so let's look into the charts. I think most of you are Trader Club members, so I'm not going to tell you about too much about the Traders Club. All right, Traders Club is there. Find us on LCMS on Facebook, LCMS Traders Club. $49 a month to join, or $199 a year to join. A lot of information there. Actually, tonight is Wednesday night, so we have a coaching call 8:30. So most of you are Traders Club members. Make sure you turn up tonight, Singapore time 8:30. Coaching call. Daniel, give us a big wave. We'll be talking about head and shoulders. Correct? Yes. Head and shoulders, inverted head and shoulders. How to use chart patterns to trade. With the volatility happening now, what might happen is you'll see chart patterns setting up into the markets, right? So that might actually be quite useful as we see price moving and setting up. You start looking for trades that you could be jumping into, right? Once everything settles down. Kenneth is with his Facebook Live. Oops, let's close that. Kenneth with his Facebook Live every night, where he will, almost every night, where he will do the updates of the markets. Some of you coming in from the trade signals on Telegram, we fire out the signals on Facebook first, so we not only tell you where to get into a trade, we tell you the reasons behind the trades as well. Okay, so the signals behind the trade, the reasons, the step-by-step strategy behind the trades. And then I think saw in the chat, a few of you are saying, active management is what we really need to do right now. And that's why I recommend it. On Monday, if you missed out the session on Monday, re-watch it right now. Well, not right now, after this call. I went through on the H1 time frame, how to actively manage your trade. Look for trades on the short term, get into that trade, actively manage it within the night, get out of the trade as well. So just that session alone on Monday night, we talked about it, 110 pips identified in that 30 minutes, where people who attended the session actually, jumped into trades and made money. So, 30 pips, 26 pips, 50 pips a night, almost 60 pips a night, which I identified for everyone there. Okay, so if you're not already on, make sure you join. Forex Factory, let's look at the news today. Today, nothing real significant. We have later in the afternoon, we have a lot of PMI numbers coming from the Eurozone. Right, a lot of PMI numbers coming from the Eurozone, manufacturing numbers. What we can anticipate to see is possibly the PMI numbers showing a level of recovery, because it's going from very contractionary to somewhat towards expansionary, but not yet. Okay, so it's still in contractionary phase, but moving towards the expansionary. So it's going to signify some kind of recovery. However, I don't think that this is going to translate significantly into the euro dollar charts. So be a bit more careful. Don't just look at a green number, or don't just look at a recovery number and then start buying the euro, right? It's not going, I don't think it's going to be that impactful. The reasons being, tonight we have an ADP non-farm number. So I think one of the guys was just going, oh, tonight's non-farm. No, it's not tonight, it's tomorrow night. Tonight is ADP. ADP is a private number. Tomorrow night, 8:30, then we have the government number for non-farm employment change, hourly earnings, average hourly earnings, and unemployment rate. Same thing as I said yesterday, just a quick recap. We're possibly going to see some recovery numbers coming from the US in terms of the employment numbers. So we're going to see some recovery. However, I don't think that we're going to see significant price movements from this non-farm session, right? So why I say that is because on Friday, straight away, it's a bank holiday. On Saturday, it's the 4th of July in the US. And from my years of trading, I've always seen that July's non-farm session is going to be a bit more muted, because bankers are on holiday. or planning to take the long weekend or planning to take the long week holiday. So from experience, I see that the market tends to be a little bit more muted when we look at non-farm on in July. Okay, this situation could change a little bit if we see very different numbers. However, if it's within that ballpark, don't expect to see much price movements in this scenario. Okay, so what you notice is nothing super exciting happening in terms of news today and tomorrow, especially not on Friday. You know, most places are on holiday, some PMI numbers again. So that translates into the charts. Jumping straight into the charts is not going to be super exciting. Is it going to do much? You know, it's probably going to continue spiking a little bit. What's happening on pound? Actually, one thing is we're in 1st of July already. So yesterday we saw a little bit of a movement, possibly also because of the end of quarter, end of the first half of the year, a portfolio rebalancing as well. So right now is the end of, well, now is July. We are possibly going to see pound move up a little bit. So on the daily time frame, I'm not going to draw any projections here because, as I've been saying, you know, on the daily time frame, it's going to be a little bit more volatile. So we look at it on the H4. What I anticipate is that we could see the pound dollar, you know, with nothing, no real news happening. We could see the pound dollar sit across a little bit, possibly moving up a little bit more, and then after that, I actually don't have a real feel of where the pound dollar is possibly going to go. It looks like it possibly can come back down to this level. So go up. I've got a big mess outside happening. Go up, test this 1.244 level, and then so maybe about go up a little bit more, and then possibly come back down if we see a little bit of US dollar recovery, US employment numbers recovering, coming back down lower at this point. Also because we see some overbuying situations here as well. So I might even say that it'll probably move up a little bit more before coming back down. Okay, so I'm being a bit more pedantic with this because, you know, it's going to be very volatile. So be a bit more careful with your trades. You know, when it's trending, you can just go, hey, it's going to move up. You know, overall view is up. I can jump into a trade, just buy and hold it and run it up. But when it's spiking up and down, being very volatile, you want to be a lot more careful with the trades. You want to actively manage it a lot more. That's also why the reason you have seen over the past couple of days, I've been really moving that lines a little bit, because it looks like at this point, if it goes there, that it might even go up to about 1.2480 before coming back down. But I think I will still be looking for that downward trade in the overall scheme of things. Okay. Um, Looking at the euro pound. Euro pound, the last time I spoke about it, I said that it was possibly going to come back down, test the 0.9122 level before bouncing back up. I had my level up to this point, which was 0.9090 or 9089 and 9080. That level, it actually came down to 9060 before looking like it's going to retest back upwards again. So I still do think that if I were to move this line, I still do think that it's possibly going to do that, right? It's possibly going to do that retest upwards. However, if it does come back up, it would need to break this resistance before going up again. So if I were to adjust my view on the euro pound, at this point now, I would say that let the euro pound go back up. I do believe that it's possibly going to go back up. So let it go back up, test the 9122 level, and if it breaks 9122 to go higher, buy it up, right? If it breaks to go higher, then you've got, you know, that upward move. You've got 50 pip stop loss. You've got 150, 200 pip take profit. If it doesn't break higher, um, bounces off this resistance and comes back down, then look to sell. You've got again 70 pips, 60, 70 pips, 80 pips for a possible 150 as well, 150, 160 pips. So both directions are quite a good risk reward scenario, but you will have to wait at this point, wait for it to test that resistance level and see what happens at that point, to break higher or to bounce back down and go and hit lower. Okay, so you would see that energy. My managed account members, clients here will have noticed that we're not firing out a lot of trades, even on the signal side. We're not firing out a lot of trades right now, because we have to actively manage, and with that volatility, the signals is more medium term. It's going to be a little bit difficult to keep firing out trades in that aspect. So at this point, watch the video we have, which we did on Monday, talking about how to actively manage your trade, looking at it on the H1 or M15 time frame. Actively manage your trade, and then you'll find some opportunities. Not a lot. If you're firing out a lot of trades, you're firing out 5 trades a day, you are possibly doing something wrong. So be careful of that. Right now, 1 or 2 good trades a day is going to be exactly what you should be looking for. Okay. With that done, Eddie, I'm just looking at the questions. Eddie's got a question: is pound US dollar H4 MAC divergence significant? Right now, it is. It does look like it's quite reasonable. However, with a divergence, I would still be looking for any specific news events that could cause that divergence to really break out. So I would take note of the divergence, but be more careful with when the triggers are likely to happen. All right, I hope that answers your question, Eddie. Any other questions? If not, I will pass it back to Caleb.
Yep, fantastic session, Jin. Thanks for sharing on today's the pound. So as we are coming close to this session, let me launch the final poll. Over here. Yeah, and let us know what do you think about this session. And by the way, a recording of this session will be uploaded in this LCMS YouTube channel, so you can go there to review it again if you have missed like some of the earlier session. So thanks all for joining for today's session. I'll see you tomorrow on 11 a.m.
All right, thank you all. Trade well, trade safe. Probably don't trade too much over this couple of days. There is no crystal ball. There's never a crystal ball. It's all analysis and taking a little bit of risk here and there. All right. Take care now. Be careful. See ya. Bye.